Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. The first quarter is over, and that means it's time to get some answers about what happened at companies in the beginning of the to start the year. Alphabet is one that I have a number of questions for. This company may be facing more disruption today than it has in 20 years. So there's a lot to answer here, both from a financial perspective and then from a long-term strategic perspective. So my name is Travis Hoyam. Thank you for watching Rive Investing. Please subscribe here on YouTube for all my content. And the first question that Alphabet and Google specifically is really going to have to talk about is artificial intelligence. We know that OpenAI and ChatGPT specifically have really taken the world by storm over the last few months. They've gathered about 100 million users, and people are starting to find new use cases and interesting use cases for ChatGPT. Just in the last couple of weeks, ChatGPT announced that they were going to be allowing developers to build plugins. Now, that's not widely available yet, but that's the kind of disruptive force that we may be seeing for a search engine like Google, because plugins are going to allow ChatGPT to be the large language model, the speaking or typing piece of the AI. And then the plugins can pull travel data or reservations or put items in your shopping cart or even pull information from the internet. So it's going to add a lot of capabilities to something like ChatGPT. And I know that there's a lot of other AI competitors out there that are thinking about the exact same things. So is this something that is going to be disruptive to Alphabet and Google specifically? I think it's too early to know that quite yet. Use cases and people's behavior is very sticky. But if we start to see revenues start to slip at Google, I think that's going to be a sign that AI is having maybe a bigger impact than the company would like to let on. On the same AI front, we need to know more about what Google has going on. They have been talking about the fact that they have a very powerful artificial intelligence model and something that they have developed internally. But everything that we've seen is kind of disappointing, to be honest. So is this going to be a case where they either have a disappointing model or they're not willing to unleash it because they're such a big, powerful company and they just want to protect the search moat? That would probably be the worst case scenario long term, because then that means that disruptive companies like OpenAI are going to be able to come in and create new products and disrupt search and disrupt that core market in a number of different ways. So that's something that Google and Alphabet is going to have to answer, is what's going on with their AI strategy, because right now it looks like they're playing defense while companies like OpenAI and Microsoft are playing offense. And that's not a position that Alphabet has been in really throughout its history. So we need a lot of answers to those kind of questions. And I would expect a lot of commentary on AI in the conference call. I don't know if you knew this, but Alphabet's margins have actually been falling for most of the last decade. There's a number of reasons for that. They're using more high-powered tools like artificial intelligence or machine learning to serve up ads, so that can make them more costly. But overall, this trend is not really headed in the right direction, especially for a technology company. So I think we want to see what these trends look like, especially given the current competitive environment. Are we seeing funds from advertisers specifically move to other platforms? And is that putting some pressure on margins? Is there pressure on the cost side with developments like artificial intelligence? Again, this is something we may not get a direct answer to, but this is a trend that I think investors need to keep an eye on long term, because declining margins can only happen for so long before it really starts impacting profitability. And then what about market share? It's no surprise that when a company gets as big as Alphabet is and has such a dominant market share, that it's going to lose market share over time. And I think that's going to continue to be the case. But what is the pace of those market share losses? One of the things I'm doing is comparing the revenue trends at both the Google side of the business, the search side, and also the YouTube side to some of their competitors like Spotify. We now have Netflix entering the equation with advertising on its platform. Those kind of companies are growing from a much smaller base, but they could be real competitive threats as we have more and more advertising options and more ways for companies who are trying to advertise to monetize on the internet. This is a company that used to really dominate internet search and advertising in general. So do we see them continue to lose market share over time and lose kind of that dominant position? That's something that I'm going to be keeping an eye on. So look at those growth rates and the growth rates compared to some of their competitors in the existing markets. And the other thing is other bets. This was really the case when Google became Alphabet. Is Google was going to be the search engine, it was going to be the cash cow, and then they were going to use a lot of those funds to place other bets. So there's been things like Waymo that had really advanced in autonomous driving, but a lot of those other bets haven't really materialized in any sort of way financially. And as Silicon Valley and investors get a little bit more impatient about profitability, about the cost that's going into all these other bets and expansions that may not eventually pay off, what does management do about that? Do they cut back on those other bets? Are they going to cut back on venture investments in Capital G and their venture capital unit, their smaller venture capital unit? I'm really curious to hear what they have to say about that, because this other bets thing has been overlooked and management is able to pour some money into that and play around with new things there. But now in the current environment, I think there's going to be a lot less appetite for that. I would love to see Alphabet rationalize some of those costs, really build a strategy around how they're going to make those other bets pay off and what the business model is. Because at the end of the day, not all of these things belong inside of a big company. They belong as private companies and VC funded companies. But that's another question that I have going into earnings is what's happening with other bets and what's the strategy for that business long term? What are your questions about Alphabet and Google going into the earnings report? I'd love to hear your comments in the comment section below. Don't forget to subscribe to Arrive Investing. Thanks for watching, everybody. I'll see you here next time.